Internal Revenue Service IRS tax news. Common but costly errors employers should avoid when filing taxes or claiming credits. COVID tax tip 2021-64, May 10th, 2021. Employers filing employment tax returns and claiming an employer tax credit should read the instructions for Form 941 and carefully complete the form to avoid mistakes. Now, that's for sure. The payroll taxes themselves are complex in and of themselves, the 941 generally being the quarterly tax return that many employers would be filing related to their payroll taxes. And with the new laws that have been taking place with regards to payroll, that's going to add a level of complexity on top of the normal complexity. Many of these laws being unique, we haven't seen them before, makes that complication a little bit more difficult as well. So many people have different options on how they do their payroll, meaning some people might do it themselves. They might have software that's helping them to do the payroll. They might have, multiple levels of support with the software for something like QuickBooks or something like that that could help with the payroll. Or you might be doing the payroll in-house if you're a larger company, or a third-party provider might be helping you with payroll, the bigger ones being ADP and Paycheck, something like that. But however you're doing the payroll, then you want to make sure that you're picking it up correctly and getting it done correct the first time. Payroll is one of those things that it's usually almost always better to take the extra time to get it right the first time, because correcting errors in payroll can be a long, tedious task and be much more costly to correct the errors at a later point in time. It's also one of those things where the errors, some types of errors, may not be caught basically until the end of the year, and then you got to deal with the whole thing to kind of reconcile the whole thing. You would think they would get caught on monthly basis, and they might by the 941s, but sometimes they don't come to light maybe until the end of the year. And again, it's one of those things that it's best to get done the first time. So whatever you're doing with the payroll, it might be worth your time to spend a little bit more time to get it right the first time. So using a reputable tax preparer, including a certified public accountant, enrolled agent, or other knowledgeable tax professional, can also help avoid errors. So when you're dealing with your payroll, again, whoever you're dealing with for payroll, many different companies, you have different options to do that, right? You could do it yourself. You can get software to help you out to do with it. You could do it in-house, or you could do it basically with a third-party provider that focuses generally specifically on payroll. But whoever you're doing that with, you want to make sure there are reputable people, because they are dealing with sensitive information and they are dealing with something that can get complex. So they need to have the understanding to do it right, so you don't have to fix it later. So mistakes can result in the processing delay or a balance due notice, which could mean additional delays or require filing an amended return. Here are some important things employers should remember when preparing tax returns or claiming credits. Ensure line 1 of Form 94X returns is accurate. Refer to line 1 instructions for details on entering the number of employees. So you can take a look at the instructions for line 1 to make sure that you're getting that line correct. And it says the 94X. I'm thinking they might be trying to say the 941 line 1, which generally will refer to the number of employees, and the number of employees is something the IRS might be more focused on with regards to the credit right now, and with regards to the changes that have been happening, and who's qualified as an employee, who's not qualified as an employee becomes important, because they were trying to incentivize the employees to stay on. And it gets a little confusing when you're trying to label how many employees you have, because there's one number and you're talking about a range of time, meaning if it's the quarter, you're talking about 3 months. So you got to make sure that you're putting the right number of employees in according to the instructions that are on the form. So report advance credits received, not the requested payments of credits. If an employer hasn't received the advance payment of credits they requested, the employer should not report it on Form 941. Use Form 7200 to request the advance payment of a credit only, not for reporting the credit. So the Form 7200, hopefully for most people, is a form that, the way I'm understanding this, again, do your own research on this, but the way I understand this, the Form 7200 is hopefully something that many people don't need, because the idea is that they're going to have a credit. The credit happens at the end of the tax period on the 941. So you got 3 months, every 3 months, you got the payroll, and then you do the 941s, which should be an informational report only at the end because you've already made the payments. You took the money from the employees and you're going to pay your half or your share of Social Security and Medicare as you go. And then the quarterly payments at the end of the period should simply be an informational report form then. Now, then they wanted a credit. So if they give you the credit, the idea was that you calculate the credit beforehand. You basically reduce the amount that you would have been paying them. You're keeping the amount instead, and then it should reconcile at the end on the Form 941. However, it's possible that the credit was actually larger than the amount that you would be paying with the payments during the period. And in that case, that's when some small businesses that would qualify could file the Form 7200 in order to get an advance payment of the credit. So in that case, you might have to deal with it. If you got the advance payment, then you'll have the advance payment that you will have to receive, which you would think would reconcile on the Form 941. But notice that if you didn't do that, and the amount that you paid was enough to cover the amount of the credit, then you shouldn't have to be dealing with the Form 7200. So once again, use Form 7200 to request the advance payment of a credit only, not for reporting the credit. Employers use this form to request the advance payment of employer credit. It is not used to claim the credit. An employer must claim the credit on the applicable employment tax return, typically the Form 941. So to actually claim it, that's where it actually is going to go. The Form 7200 is the request for an advancement of a portion of the payment. If the employer has received the advance payment request, they must reconcile it on Form 941 by reporting the advance payment received and claiming the credit for which they're eligible. So you can see what happens here, right? You're going to then claim the credit on the 941, and if you got an advance payment, then that should match out against the credit is what you would think would be happening here, right? So you're going to say, here's the amount of the credit. I got this advance payment that applied out to the credit, and in a perfect world, everything will match out, right? It'll tie all out, and you'll be good. This will be an information return. So if an employer receives an advance payment of a credit but doesn't claim a corresponding credit on their employment tax return, they may receive a balance due notice. So if you received an advance payment, meaning you got this advance payment with the 7200, but you failed to report the fact that you have a credit related to it to match it out on the Form 941, then the IRS is going to say, well, you might owe us money in that case because you took basically an advance credit without actually claiming the credit. You got the advancement, but then you didn't claim the credit on the Form 941. You got the advance, but the advance wasn't for something that you actually told them that you should get the advance for, which would be the credit on the Form 941 at the end of the period, at the end of the quarter. If an employer filed an employment tax return and did not report a credit they would otherwise entitled to, they will need to file an amended return using Form 941X to claim those eligible credits. And that's kind of what you want to avoid. If the only problem is that you didn't claim the credit, maybe the 941X isn't too difficult, but, filing the amended returns is something that usually can be kind of tedious if you have to do it for like an entire year, especially if you messed up the payroll. It shouldn't have any impact on the W-2s and that kind of stuff, hopefully. And so it should be a fairly straightforward thing. But again, payroll is kind of a pain. Payroll's a pain. So I would try to get it done right the first time, especially with regards to wages and withholdings and all that kind of stuff, so that you do not have to amend it because it's not fun. It's not fun to amend it. So inform third-party payers or reporting agents. Employers using third-party payers or reporting agents must tell their third-party payer or agent they requested and received an advance payment of credit. Third-party payers, including reporting agents, should also ask employers if they requested or received an advance payment or credit using Form 7200 advance payment or employer credits due to the COVID-19 before filing Form 941. So make sure that whoever you're working with, clearly that you're talking to them and saying, are you eligible for the payment? They hopefully, if you're working with a third-party agent or a payroll specialist, they are asking you. They should be asking you that. But if they don't, you should ask them, do I qualify for this credit? What is the credit? Do I have enough in the withholdings to get the credit the way it should work? If not, should I be filing this Form 7200? Or if you filed the Form 7200, make sure that if you have a third-party payroll person doing your payroll, that they know that you filed for it and got any kind of advance payment, so they we'll include that on the payroll forms. So use fractions of cents line correctly. The fractions of cents line should be used for fractions of cents due to rounding relating to the employee share of Social Security Medicare taxes. So usually remember the 941 is an informational return, meaning what should happen. And this is kind of like, it's the same as your 1040, but the 1040 for your individual income taxes. The problem with the 1040 is that it's way too complex. Our tax code system got way out of hand, and we got this progressive tax system, so it's impossible for us to actually pay the correct amount of tax as the year goes. But the idea is the same for income taxes. The idea is that we pay as we go, and then when we file the tax return in the next year, April 15th of the following year, it should just be an informational return, meaning we should be able to say, hey, look, this is how much I owe, this is how much I paid. In a perfect world, it should match perfectly, and it should just be an informational return, and we shouldn't have to owe anything. We shouldn't get any refund at that point in time. However, the income tax is way too complicated for that to happen. Therefore, we shoot for a small refund. The payroll taxes is basically the same way, but it's not too complex yet in order for us to get it done correctly, right? Because the Social Security, the Medicare are basically flat taxes. In other words, they're a lot more easy for us to calculate without having to do the tax return in order to know what we actually have, because we don't have this crazy, progressive tax system and all these other things that could be involved in it. So the idea then is that you're gonna basically say, look, I paid monthly, or I paid weekly or bi-weekly, however you made the payroll. I already paid you guys the money. This 941 return is just an informational return to double check what I owe you and then match it up to what I paid you. Now, obviously, because we pay whenever our payroll is, that's when we basically pay our taxes. We withhold and then pay it out close to the payroll date. Then we could have rounding errors, right, between that, because we're going to be paying every week or every 2 weeks or bi-weekly or semi-monthly or whatever. And then we file this thing on a quarterly basis and report it for 3 quarters. So that means that we could have some pennies for rounding. And the IRS is saying that we don't want you to pay pennies, or we don't want to deal with pennies. So they've got this little rounding thing there. So if you're off by some cents, then of course you use the rounding thing, and you could just say, oh yeah, it's off by a few pennies due to rounding, and that's okay. If you put something in the rounding area which is significant, like you're like, I rounded it off like $20,000, that, the IRS, that's not why the line is there. That's not rounding. There's something wrong there. So that they're trying to tell you here, that's the rounding line. So it should be a rounding difference between, and like pennies. So only claim credits they entitled to, and they shouldn't exceed limitations. Before employers claim credits on their employment tax return, they should review IRS guidance and the FAQs, frequently asked questions, on irs.gov to make sure they are eligible to claim the credit, they are completing the forms and claiming the credit correctly, and they don't claim a credit that exceeds the limits. So this can get quite complicated because it's a new law. We haven't seen it before, but you want to make sure you do it properly here, and so get the instructions on that and do your best to claim the proper amount of the credit. And again, it's best to do that right the first time, usually for payroll. This one, the credit, I don't think it's going to mess up any of your other kind of reporting. Like, it's really not fun if something goes wrong with your W-2 kind of information and stuff that you're going to send out to your employees. I'm not sure, this credit information, if you got it wrong, if it would mess up your withholdings and that kind of thing. So it might not be as problematic, but again, I would do my best to get it right the first time. So complete amended tax returns. If an employer is amending an employment tax return to claim a credit, they must complete all the lines associated with that credit. For example, if they are amending a return to claim additional employee retention credit, they must complete the lines that relate to qualified wages for that credit and qualified health plan expenses allocable to those wages if allocable. So more information can be found on the resources below. There's a forms and instructions for 7200, coronavirus tax relief, employer credits, COVID-19 related tax credit for required paid leave provided by small and mid-sized businesses, FAQs, frequently asked questions. So there's links to that excellent reading material here, and there'll be a link to this in the description.